Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Homeowner, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're discussing a report from the Canada Mortgage and Housing Corporation, or CMHC, which highlights that the majority of Canadian mortgage holders are facing financial strain. This is a significant finding, especially in the context of the current economic climate.
Steve, it's quite concerning to hear that so many Canadians are struggling with their mortgage payments. The report suggests that higher interest rates and the rising cost of living are major contributing factors. As someone who works closely with clients, I see firsthand how these issues affect their day-to-day lives.
Absolutely, Janine. The numbers really paint a picture of the challenges ahead. According to the CMHC, many homeowners are finding it difficult to manage their monthly payments, which could lead to increased defaults if the situation does not improve. It's crucial for mortgage holders to stay informed and be proactive in managing their finances.
And Steve, for those who are feeling the pinch, it's important to remember that there are options available. Speaking with a mortgage advisor can help explore possibilities like refinancing or adjusting payment terms. At Real Approved, we always emphasize the importance of having a plan in place.
That's a great point, Janine. The report also mentions that some homeowners are resorting to using credit cards to cover shortfalls, which can be a dangerous cycle to get into. It's vital for people to seek advice before making financial decisions that could have long-term impacts.
Yes, Steve, and it's heartening to know that there are support systems in place. The CMHC itself is working on initiatives to help Canadians better manage their housing needs, which is a step in the right direction.
Indeed, Janine. As we continue to navigate these challenging times, staying informed and seeking professional advice can make all the difference. We'll keep following this story and bring you updates as new information becomes available. Shifting gears, let's discuss Toronto-Dominion Bank's recent earnings report. It highlights some interesting trends in the mortgage market. The bank saw a decline in residential mortgage volumes in the second quarter of 2025, which is not entirely unexpected considering the current economic climate.
That's right, Steve. The report mentions that the residential mortgage portfolio fell to $267.4 billion from $270.9 billion in the previous quarter. It's a reflection of the pressures on home buying activity, with elevated interest rates and increased inventory.
Sona Mehta, Group Head of Canadian Personal Banking at TD, pointed out that there was an expectation for a stronger spring market earlier this year. However, the uncertainty in the market has weighed heavily on buyer sentiment.
Yes, and while broker-originated volumes were softer, TD saw strength in its proprietary channels, with branch and mobile mortgage specialist originations up double digits year over year. It's a sign that despite macroeconomic headwinds, some areas are still performing well.
Absolutely, Janine. It is essential to note that TD is focusing on doing quality business rather than just chasing growth, which is a prudent strategy given the circumstances. Profitability remains a key factor for the bank.
And it seems that TD is also seeing a trend of elevated mortgage paydowns, particularly in the early months of the quarter. Many of their premium borrowers used bonuses or personal liquidity to reduce their balances, which is indicative of a financially savvy customer base.
The bank's credit performance is also stabilizing, with impaired provisions for credit losses declining by $270 million. This shows broad-based strength across the bank's lending book, which is a positive sign amidst the challenges.
It's good to see that TD is well reserved, having added over $500 million in reserves over the past 2 quarters. It highlights their cautious approach to managing potential risks.
Another key point is that about 40% of TD's mortgage book is set to renew by the end of 2026, with many of these being fixed-rate loans. This could present challenges if interest rates remain high.
Exactly, Steve. Homeowners will need to prepare for the possibility of higher rates upon renewal. It's all the more reason for individuals to consult with mortgage advisors to explore their options.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.